Hey guys, welcome to another Trade Genius podcast. I'm my good friend Bob Cooley here. We're going to be a little bipolar today, guys. We're going to show you the good and the ugly. Let's dive in.
Trade Genius.
All right, Bob, you sent over this chart. You'll have to explain this one to me.
Yeah, so really what it's showing is that if you want to throw this chart up here, here's the ugly first, is that, we're at a point of an extreme again where you have the rotation down to the trend line. And so it's just another breadth kind of indicator that said we pushed to the max wall here, and now it's time for it to do regression to the mean. Now, the good news is if it could be a consolidation regression, but that's not how usually they work. They're usually violently moving down. So I want those an overthrow from yesterday's conversation to show you. But what I really want to show you guys today is that, even though we're calling for pain, we don't always trade pain. We were long going into this chart here. Let me throw this next chart up at you. There's a thing called don't short into the hole. Okay, this is short. This would be, I don't care how bearish you are, and I'm very bearish, but when the market presents you with an absolutely disgustingly oversold breadth reading, you have to go long, okay? And, you can go long the most damaged names, or you can go long an index. In our case, we went long the index here. We did a nice trade on SPY to show people. And basically what this says is when you get a breadth reading at minus 50 and it comes back inside, you have 21 days here to make a really good trade. And ironically, and the reason why I set this up is Phil's been calling for, rally into the inauguration zone. Well, that takes us right into the inauguration zone. So a lot of people follow this chart. This wasn't something I found. It's not a hidden treasure from, Indiana Jones. I mean, this is one of the most widely followed trades out there. And it was no accident that yesterday, and another thing too, guys, put it in your notebook. You get a red week going into Thursday, noon-ish, West Coast time, you buy to Friday close. And so we had this set up, you had that week set up, and it just made for an easy trade. On an option trade, made about 140%. So not bad living. It's more than my week's quota in terms of cash flow, and investing $3,000 and pulling back out $4,800 is not a bad living. So I think at this point, when this plays itself out, Phil, I think this is when we roll over again. So I'd be continually getting more and more defensive and just take these opportunities as they present themselves and protect yourself, because I think the swoon when it comes is going to be brutal.
Yeah, I would agree. I think time is of greater consequence now than price. So what that means is we have a certain amount of time now left to get whatever we're going to do in this market done. We're going to make a new all-time high. We should probably see it in a couple of weeks. I think given the setup that we've seen, Bob, where we pulled back ahead of the inauguration, now you have a setup where things got very, very oversold, and we have some different breadth readings that we use as well. And they were all at basically what I consider capitulation levels, even though the candles on the daily chart may not have looked like that. But inside, under the hood, you're getting at levels that are just kind of extreme for what these modern markets do in terms of selling down. So it checked boxes similar to the McClellan oscillator here. So I'm not surprised we're going to go back up. And in actuality, if you look at the chart, a lot of times you're going to attack the highs from these types of pullbacks. So really the only question here is, did we see the lower high when we bounced up last week and we hit the 786 last week, right? The 786 retracement. Was that our lower high? If it is, then we won't even get that high. We won't even see that level up there at 6,100. If not, and we do surpass it, then we will probably get that other scenario we talked about where we just have a very aggressive final move up. And what that would look like is a sharp weekly candle higher. And that would probably lead up into the inauguration later this month in a couple of weeks. So that's kind of and next week I think is really, really, really important to determine what's going to happen. But I think by and large, whether or not, we put in another lower high or we make one final push to an all-time high, I think this chart here essentially tells you that you are at a point where we will see a significant mean reversion move back down.
Yep.
And that's what this model, these mathematical models are simply just trying to find the mean reversion. And so for your portfolio, you want to sell at these extremes and then rebuy around the mean line. or below it if you can. But even if you just get back to the mean line, that's a significant dip buy opportunity. So
Yeah,
I think
absolutely.
totally agree with you that what your outlook here, and it's been it's kind of nice to see what we've been expecting to see, right? Move up into the end of the year, and now trying to sharpen the pencil exactly where this tops out. I think it's a buy the rumor, sell the news event into the inauguration, and then we'll watch very closely for weakness going into February.
Yeah, and I think, Phil, what I'll do over the weekend for you is I'll lay out those Fibonacci's on all the major indexes for the the all-time high and the swing low on those, and so we can tell you guys where we're thinking, the 7-8 retracement is, and are we going to bust that or not, and then also where the failures are, so you guys can get a sense where we are. I think today on SPY, didn't we ramp up into the 9 EMA and hold? So it's still a prove me situation.
Yep.
If it would have broke through that, I would have probably kept my SPY calls on the weekend, because usually Friday up, Monday up. But I just got a little nervous because it started softening, and I'd rather right now just take my money and complain about a trade I didn't get in versus complain about a trade I didn't get out of. So I
Right.
think that's the mindset you have to have right now. And I'm telling people too, if you have a loss on a trade and you're trying to get it to break even, if you get a sell signal, sell. It's better trying to get out of an ocean at 3 feet than trying to get out of ocean at 50 feet. Okay. Because it can go bad on you really fast and you'll be frozen with indecision. Trust me, I know. And so you might as well just take your poison and be done with it. And you freed up cash for another trade. With that, Phil, I'll let you go. Have a great weekend, everybody. Thanks for a good start. It's nice to end the week the way we did and begin the year the way we are. And I think this market's going to be definitely like the theme of this podcast. It's going to be bipolar. We may not get anywhere this year from end to end, but there's going to be a lot of chance for profit in between, because it's going to generate a lot of heat and not so much light. And we showed you that trade yesterday. Statistically, the market's flat over the next 10 years. So you may get a lot of standard deviation moves and it may not go anywhere. That's what you want to hope for. It can get a lot worse. Thanks, Phil. Have a good weekend.
Trade Genius.